All right, next module, selecting a market. We're going to dumb it down. A lot of people are talking about different markets in the Midwest and in the Carolinas and Texas and Florida. They're all good markets depending on where you buy it at and what the population is and what the residential market is showing within the subject area. But it is important to do your due diligence. It is important to understand the market. It is important to measure analytics within that market. If you look at Austin, Texas, for example, over the past, I think, 12 months, the residential home value decreased 20% because there was an influx of population. It drove real estate up, and then 2023 follows, and interest rates rose, and it devalued the market. So it is important to measure market analytics when you're selecting a market, and we're going to dive fully into how to do so and what to look for in this module. All right, I'm going to start this off with a story because I believe stories tell a million words. 7 years ago, my sister moved out to LA and she loved it. She was there for a year, she still loved it. 2 years, started having conversation with her. She's like, this isn't for me. I don't know what it is. I don't know what it is. I don't know what about it. The community's beautiful, the weather's beautiful, but something's missing. And I told her, Kara, home is where the heart is, right? And as we look at this one slide, the first thing that I put up is home is where the heart is. Start in your backyard. Why start in your backyard? Your sphere of influence is there. People you know are there. Referrals are going to be that much easier. You can walk the properties. A lot of people are talking about buying out of state and going to this state. It's cheaper. It's more affordable over there. If you're in a market that you believe in the market analytics show it's a healthy real estate market for residential transactions, then start there. If it's a little bit pricier, that's okay. Buy it right. If the market analytics show that it's a healthy market, focus there. Because you can drive 2 towns over to walk the property to make sure that the project's going according to plan. Start there. Check population growth. What we like to do is we look within an hour radius of a larger MSA. We invest out of state as well. We're in Connecticut. We focus on Connecticut because it's our backyard and we know the market, right? A couple things that you want to pay attention to when you're measuring market analytics is days on market. So if you are buying in an area where the after repair value is $300,000 and all of these properties, let's say in specific counties, are staying on the market for 60 days, it's not that attractive of a market because, again, the idea of fixing and flipping or redeveloping is moving money with speed or velocity of money. If a property's sitting for 60 days and it's done up well and it's beautiful, check out other markets. Whether it's suburbs or whether it's extending your search criteria out 45 minutes, do that due diligence. We like to look for properties that are on days on market, days to under contract, 21 days or less. It's the average days on market is around 60 days, right? So pay attention to days on market. Choose emerging markets. Again, I mentioned larger MSAs within a 1 hour mile radius or 1 hour driving distance. I'll speak to what we know here in Connecticut. Why do we like Connecticut? Well, Connecticut is anchored by the hub of the world. What do I mean by that? New York City, an hour away from Milford, Connecticut. New York City is extremely costly. Taxes are up. Politics suck. Super congested. Not a nice area to raise a family. So what's happening? There's outward migration from these larger cities to the suburbs, to adjacent states that are more affordable. There's better property taxes. Their dollar goes a lot further in states adjacent to where they're currently located. And that's why we've seen a market appreciation here in Connecticut specifically, and continuously see that regardless of the economic environment of the interest rate volatility, there was still a market appreciation within Connecticut, which is why we like Connecticut and which is why we still double down in Connecticut specifically. When you're looking at market analytics, things to pay attention to. Average days on market. So identifying what at what price point are properties selling the fastest? So if you do a criteria of $0 to $1 million and you're looking at properties from 400 to 500 after repair value, from 500 to 700, from 700 to $1 million, you're seeing, well, 500 to $1 million days on market is around 60 days versus 400 to 500 days on market is like 20 days. Well, you might want to stay in the lower price point. The profit margin might be a little bit less, but you're going to be able to move money faster. You're going to be able to turn these projects around faster. You're not going to be carrying the bag like we were when we were buying $700,000, $800,000, $900,000 homes. Pay attention to that. Check new inventory year over year. Check new inventory in the past 3 months. If new inventory over the past 3 months is significantly less than new inventory year over year, it's one point to pay attention to. Another point is how many properties have sold in the past 3 months, right? You want to make sure there's a healthy balance, and we're going to dive into the ratios to look for so that you can measure and have an informed and educated decision when you're choosing the market. Check average sale price year over year. So, for example, in Connecticut, the market appreciated about 8% from 2022 to 2023. In 2023, if you recall, interest rates were significantly higher, but we still saw the upward trend of average sale price, which shows either inventory's down, buyer pool's up, or a little bit of both. And we saw a little bit of both. Inventory was still low, buyer pool was a little bit less, but it's still a seller's market. Properties appreciating, people are bidding over asking, or people are just listing the properties higher and getting the number that they're looking for because of the buyer pool that's within the specific area that you're looking at. All right, finishing up selecting a market. A really easy approach to identify whether a market is sustainable and a healthy market to flip in. It's called the Ryan Pineda approach, really. We got it from Ryan Pineda. He's the established fix and flipper out in Las Vegas. Has done over 1,000 flips, very, very established. But essentially what you do is you look at the past 30 days and see how many number of properties sold versus how many active listings are currently in the market. So for example, if there's 10 listings that sold in the past 30 days versus 5 new active listings, you take 10 divided by 5 and you come out with 2. 1 to 2 is a very healthy ratio. It means it's a seller's market. 3 to 4 is kind of like your norm, and 5 plus is obviously not that attractive, so you want to be wary of those markets. Very easy approach. You can do it pretty quickly. You can do it on Zillow, Realtor.com, or have your agent send over properties that have sold versus that have listed in the past 30 days in the market or county or city that you're looking to fix and flip a property in.